All right, well, I know we have a guest as well to continue to focus on this.
So let me just go right to it. As investors grapple with concern in the muni market, rising interest rates, corporate debt, will MLPs continue to provide steady income and that rising distribution we just talked about? So joining us right now is an expert in the asset class, Steve SMaresca, Executive Director of Morgan Stanley. So, Steve, we'll take it right there. Will the MLP asset class continue to provide investors this safety of income and rising distributions in the next decade?
We think it will, and thanks for having me back, Gary and David. I think the important thing to note here, Gary, is what you mentioned before. This isn't just a call on interest rates. The growth component here acts as an inflation hedge. And when you look at MLPs, they are really total return vehicles over time. The upfront yield right now may be 6%, but the kicker is the fact that we expect at Morgan Stanley another 5.5% in distribution growth in 2011. And when you look over 10 years, MLP distribution growth has been more than 3 times the CPI index as a measure of inflation. So you're beating inflation and you're getting good total returns. So we do think it can continue.
Steve, talk about the type of investor that owns the MLP today as opposed to 10 years, because I think that's an essentially important part of it as well. Do many of the investors that own the MLP today own them as a long-term investment as opposed to just an asset allocation, quick trade?
That's a great point. And right now we are seeing, I mean, it is a long-term investing class, and the investors are in it for a 2 or 3 or 4 year time period. When you look at it, you've had lack of correlation to the broader markets, and the total returns have been 15 or 16% over that decade, as you noticed. We're seeing investors come in, mutual funds, new dedicated pension allocations. These are longer-term players. I think they look at the critical energy infrastructure angle that the MLPs play in the U.S. economy, and they want to be a part of it.
And in terms of the distribution growth, can you identify for us which of the companies that you expect will have the fastest distribution growth, that being such an important component for the next couple of years?
Absolutely. There are 2 that come to mind, and the first one is Williams Partners, ticker is WPZ. It's our best large cap idea. The upfront yield is 6%, but we think you're going to get over 8% in distribution growth in 2011, largely to do with their unique position in the Marcellus Shale, where now Chevron is a part of it. We think you get a big ramp up in volumes. And the second company is Western Gas, and the ticker is WES. Importantly there, Anadarko is the parent. We think there's going to be over $500 million of asset purchases from Anadarko this year, and we see distribution growth in 2011 for Western of 12%.
Steve, as somebody who's followed this area a bit from afar, nonetheless, I do know enough to notice, energy infrastructure has always been an important component, important underlying industry, if you will, for MLP structures. Is that changing at all? Is it continuing? And within energy infrastructure, is it changing from, gas to oil, for example?
I think it is changing. It's changing for the better because we think more assets are going to come into this structure. I mean, it's a tax pass-through entity, as Gary noted, but basically you have about 40% of U.S. energy infrastructure assets in MLPs right now. We think that's going to grow higher over the next 5 years.
And why will it grow higher over the next 5 years?
Because corporations are looking at the MLP tool as a tax-advantaged way to put some of their assets in there to help get cash up for them to grow their own separate businesses. So it was created as a policy tool in the 80s for energy infrastructure. It's a low tax advantaged vehicle, low cost of equity. So people use it to put pipelines and storage terminals in there to help grow. So we think that continues. We also think you're going to see movement into more oil given where oil prices are right now. And we're seeing that happen. The shift of E&P companies into oil plays. We're going to probably see more crude oil storage as crude oil imports come down from Canada.
Right. Of course, you mentioned tax advantages. Those who are looking perhaps for something that could be a threat. Is there any threat? I know it's occasionally discussed, or at least comes up, and you watch the MLP sector get hurt, about a change in the tax advantages that these MLPs have?
I think on the contrary. I mean, we talk to our D.C. consultants pretty frequently. I think if you look, energy is pretty critical, obviously, to the nation's economy. And right now, 2 years ago, you actually had the expansion of qualifying income for MLPs, and you had renewable fuels like biodiesel and ethanol that can now be part of MLP qualifying income. So we don't think it's a real threat. MLPs play a critical role. We think it'll continue to be the case.
Great. Thank you, Steve. Thanks to Steve SMaresca, Morgan Stanley, and